Welcome to Dr. Fred Markets. This is not financial advice. Every day, billions of dollars move across markets that most people don't even know exist. Crypto, stocks, AI, the signals are there if you know where to look. And that's exactly what we do here. Let's dive in.
The ground beneath the financial world is shifting rapidly, threatening old paradigms. Are you ready to adapt or be left behind? Just yesterday, barely mentioned in the chatter, was the startling claim that $95 is now the new oil price equilibrium, according to StanChart, a statement that could rewrite the energy sector's future. Yet, amid these colossal shifts, a silent revolution reverberates beneath the surface, driven not by oil, but by blockchain and artificial intelligence. Consider this. The rise of AI, as Prime Minister Sunak points out, is flattening the jobs market for young people at an unprecedented pace. Have you ever wondered how technologies like AI and crypto converge to paint the financial landscape? What if I told you they're not just complementary, but crucially interdependent in this evolving market dynamic? Not long ago, we thought sectors like transportation were safe. Yet as Elon Musk delays the Tesla Roadster unveil, the tension between innovation and reality in tech and auto grows palpable. While Musk juggles ambitions with pragmatic delays, crude oil surges to a comfortable perch at $134.72, up over 4%, powered by unexpected geopolitical tensions. Now consider, how does that mix with AI's narrative of job displacement? We'll unravel the tangled web as we progress. NVIDIA, a titan in AI chip production, closed at $199.64, reflecting a 1.41% slump. This dip, seemingly disappointing, might just present an opportunity or a risk. Now, as you're mulling over this, think about the role AI plays in balancing portfolio risks and how it affects traditional sectors. We'll soon explore how you can leverage this intersection of two powerhouse technologies. The S&P 500 dipped slightly to $708.45. It's a minor decline, but significant in its proximity to May's historical volatility start. With Lufthansa cutting 20,000 flights amid soaring oil prices and war-induced supply strains, the direct impact of global events on financial metrics becomes evident. Every canceled flight tells a story of financial ripple effects that cryptocurrencies aim to counter. But can cryptos stabilize markets as traditional resources falter? Here lies the crux for investors betting on new age tech. The energy sector's price spike adds layers of complexity to an already tangled financial weave. Former Congressman Devin Nunes steps down from his role at the Trump media company, invoking questions about political influences in media conglomerates, a hotbed for crypto scenarios. The decentralized nature of cryptocurrencies challenges top-down structures in such industries. Are we missing the deeper narrative that cryptocurrencies and AI bring to these domains? We've reached our first pivotal moment. How does the fragile dance between AI-driven efficiencies and the volatile swings in traditional resources play out in real-time markets? As risky as these entanglements may seem, there's an underlying pattern to capitalizing on them. What happens next hinges on understanding a simple concept: how crypto and AI amplify returns through predictive algorithms. In plain terms, they decode chaotic data patterns that evade traditional financial instruments. Imagine an AI system identifying potential in a digital currency's upward trajectory before human analysts even begin to grasp it. This is just the start, as our story only gets more intriguing from here. Consider Tesla, sitting at $373.72, a concerning dip of 3.56%. Tesla's oscillations in market value reflect more than mere consumer sentiment. They unveil the deeper tensions in balancing green tech with scalable AI solutions. As roadmaps like the Roadster delay indicate, it's not just about speed or efficiency, but aligning AI capabilities with evolving market demands. Here's where it gets deeply fascinating and yet frightening. AI not only forecasts job market trends, but can also trigger shifts we haven't yet fortified against. A dual-edged sword, AI's proliferation demands more robust skill adaptation among young employees.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here. And the second part is going to take it further. Let's go.
Could cryptos act as financial buffers in a world veering towards such job disruptions? With Lufthansa slashing flight numbers due to fuel price inflation and geopolitical unrest, a move impacting thousands globally, one must ponder why more airlines aren't leveraging these revolutionary technologies. Cryptocurrencies provide an alternative, a form of decentralized currency that can bypass traditional fiscal limitations. On the other hand, AI can preemptively model and mitigate such disruptive impacts. As AI matures, will financial systems lose their volatility armor without embracing decentralized tools? Reflect on the fact that while the USO celebrates its 4.11% hike, such spikes obfuscate the undercurrents of digital transformation. At the intersection of energy markets and tech revolutions, AI and crypto emerge as the stabilizers of an otherwise turbulent financial equilibrium. But how quickly can markets adopt such changes before old practices drag them into obsolescence? The question isn't solely about technological potential. It's about vision understanding how AI-driven insights, combined with blockchain's transparency, can forge a robust, adaptable financial ecosystem. The game, however, is ensuring swift pivots to these tech-driven solutions before constant upheavals cement into chaos. In the ebbing narrative intricately allied with AI and crypto, Nate Siegel of Standard Oil once mused that the prospective paths of energy economics are perpetually overshadowed by tech revolutions at every juncture. But remember how ingenuity often flourishes amid devastation. Is it truly a coincidence that financial queries intersect so deftly with AI today's crescendo? Envision a marketplace where cryptos offer stability against traditional equity shocks, where AI systems suggest pathways grounded in statistical foresight rather than speculative gambles. It's about reinvigorating dormant assets through innovative paradigms. In today's era, flying blind is no longer an option. Let's encapsulate today's story in a three-pronged conclusion. First, comprehend AI and crypto's joint potential. Their intersection offers new proficiency in unforeseen events. Second, acknowledge their combined resilience to market volatility. Finally, act. Equip yourself. Delve into these technologies. The AI and crypto era isn't just knocking, it's reshaping the edifice of modern finance. Now you might wonder, what does this mean for the average investor or even the seasoned trader? How does one navigate this evolving landscape without losing sight of traditional fundamentals? The answer lies in adopting a progressive mindset, an approach that is not only reactive but also anticipatory. Imagine integrating AI-driven tools into your investment strategies, tools that provide real-time analysis and predictive insights based on vast datasets. These tools aren't merely supplemental, they are becoming an indispensable part of the investor's toolkit. Such technology allows you to identify patterns and opportunities you might have otherwise missed and to react with heightened agility to economic shifts. Meanwhile, cryptocurrencies continue to mature. The regulatory frameworks around them are tightening, which adds a layer of stability, but also reassurance to potential investors who were previously hesitant to enter the cryptosphere. The maturation of cryptos serves as a checkpoint, indicating their evolution from speculative assets to credible financial instruments. Yet, we must tread carefully. The volatility inherent in these assets hasn't vanished. What these technologies promise is not improbability elimination, but rather a refined approach to risk management. By streamlining decision-making processes and enhancing predictability, AI and cryptos collectively furnish us with the tools needed to traverse financial terrain with higher confidence. As we move forward, let's stay informed and adaptive. Engage with communities, participate in discussions, and never shy away from learning. The age of financial alchemy powered by AI and crypto is here. Embrace it, and you won't just witness the transformation. You'll be part of it, steering your financial future towards unprecedented possibilities. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.